Hey, what's up everybody? Today's Monday, February 9th. This is Trader Tim from eMiniMind bringing you another Monday market analysis video. So, two things I really want to touch on this week. We'll keep the video short and sweet. And the first of which, as you can see here, that we broke out of the triangle that we've been in. And usually what'll happen is the highs get higher and the lows get lower as we come into a very tight triangle or pennant formation. And usually these triangle formations follow big moves in one direction. So if you kind of go back things up here to October, we had a strong move higher, and then we've gone into this pennant or triangle formation in the past month and a half, going on just about 2 months now. And we did have a tail break the lows down here early last week and actually in the prior week as well. But this is really the first close we've had outside of this little triangle, or rather large triangle. The low down here on the ES is about 1960, and the high is 2090. So almost 100-point range from 60 to 90. A pretty big range to have this triangle pattern. So when we get a close outside of that, that's a pretty strong conviction in the sense that the bulls are starting to take control here. If I look at the 24 hours worth of data, it's basically the same thing. We don't really have a close below the low, but we do have a close above the high. And as I was talking about last week, we kind of have an inverted head and shoulders, this being the left shoulder, the right, or the head down here, and then this being what potentially would be the right shoulder, and then sending us to new highs. And so what I'm looking at for the next couple of days is going to be a pullback to roughly, right halfway back of this most recent low to high, but also it'll be essentially halfway back of this entire move, right at 2020s. And there goes the bell for the day, so the markets are now closed. But the apex is, roughly 2010 to 2020, so I'd look for a pullback here just to kind of maybe dip back into the triangle a little bit. And if we can get a rally at 2020, then I would look for us to move higher and take out the swing high. And at that point, it'd be clear sailing to new highs. There is a chance, because we've kind of gone from the lower end of the triangle to the upper end, that we could come all the way back down to the lower trend line here and break the 61.8. But at that point, I still wouldn't get overly bearish until we took out the swing low back here, because there's at that point there would be a lot of people that would have been faked out up here, and really a push down to the lower end of the range wouldn't necessarily be new shorts coming in, as it would be the longs getting stopped out. So that's where you can have these sharp rallies, sharp declines, and then a rally, or vice versa, where you get these V patterns. If I flip over to the HAKAI chart, one thing you want to pay attention to, it's pretty clear on a HAKAI chart when the trend changes, because the color bars, in this case the red and green, or if you're using a black and white chart, the open and closed bars are, they're pretty easy to see. So when we come down here, assuming that we do get a little bit of a pullback to 2020s, I would look for a couple of red bars to form. And once we get that first closed green bar, that would be a really strong signal. If we can get a little pullback, a rally off 2020, and then a close with a green HAKAI bar above the downtrend line, that would be, just about the earliest confirmation point that the trend is now turning higher, and we could look for new higher highs and higher lows to take us to new highs on the S&P. So just kind of looking out to some potential scenarios. That's kind of what I'm looking at. The other thing I wanted to talk about are give you a couple of stocks that I'm in and watching. Home Depot, we've been talking about for a few weeks. I still like this one. If we get a little bit of a pullback in the market, I would like to see Home Depot pull back to maybe 107 or so, and then look for another entry in there. Google was another one we talked about before we got the breakout in the broader market. We had this breakout of Google breaking out of its down trend line right here, and it's gone into a triangle pattern. You can see with Google it's much tighter how we've come to the apex. It's very clear with a low put in here and then a higher low, and then the high up here, and then a lower high, and then another lower high, and it's very, very symmetrical triangle. So at this point, this 525, 530 level, Google is just screaming for a breakout. And with this strong volume down here on this large body candle, and the fact that we're trading all of these days here are still within this large body candle from back on the 30th of January. I would look for a move above the 30th bar to start taking us higher, since we broke out of the downtrend in Google. A couple other names: Apple. Not really looking for a new entry right here just yet, just because we're kind of flattening out at highs. I would, in this situation, because we've got a double top right here, I would look to buy on a breakout, or I wouldn't want to buy Apple here on a full retracement, because that would be saying that we have confirmed a double top. If we just sold off from right here, that would confirm the double top above. So I would like Apple on a breakout with a tight stop and a smallish move, but I'm not overly anxious to get into Apple right here, as opposed to Google, where we're at an apex, and so the potential for a move is much higher. Even if we were just to go up to the prior highs back here, that's 530s up to about 600. We talked about Apple, Google. If we do get some selling, there's Yelp had pretty poor earnings the other day, and it's got some strong volume to the downside. So if we do, if you need a short to kind of balance out some of the longs in your portfolio, I would look for Yelp to get a little bit of a rally, especially if the market rallies. I would look for Yelp to kind of get pulled up with the market, and then look to short. If we break above this high from Friday on the 6th, then I would look for a gap fill up to 50, especially because 50 is a round number. But at this point, with the strong volume and the two big body down days, I would just look for a short rally and then look to sell and take Yelp down to maybe the $40 or $35 range. So that's what I've got for you today. Kind of a messy sideways consolidation, but you can kind of see somewhat of a rectangular grid forming here on the S&P, with the support back here, kind of an area of support and a general area of resistance. So there's some good lines in the sand that we're watching. It's a little bit clearer here over on the ES, especially with the Hakanashi candlesticks, to see the close and the breakout above the downtrend line. So that's what I'm watching for this week. And as always, if you have questions, feel free to shoot me an email. And if you want to get access to all of the videos and webinars, go ahead and sign up for become a eMiniMind VIP and head over to the eMiniMind VIP dashboard. So with that, we'll talk to you next week.